Hello and welcome to another update video about oil. Today I haven't covered oil for a little while. Not too much has happened. I have changed my scenario a little bit. So in the short term, the alternative count becomes the primary. That, however, does not in any way impact the longer term scenario, that I still expect the price to at least reach the 76 US dollar level. And we're going to talk about that in this video. If I zoom out a little bit here on the weekly chart, just wanted to show you my Elliott wave count here for oil on the higher time frame. Then we zoom in and take a look at the lower time frame. And first things first, I currently don't think that the downtrend for oil is over. Yeah, if you remember correctly, we've talked about prices around $60 already in February. And the price has moved into that direction. Yeah, at the time I think we were above $110 or something for oil, but it didn't quite get there yet, right? Oil recently broke through key support levels, and I think we're on a good way towards that area. And I'm going to explain to you why, and I'm going to show you why. However, let's first start with the longer time frame count. My view is that here, this is the longer time frame count, right, of the Brent Crude oil futures. We created a wave 1 that was back in 2008. We then moved down in a very, very long and rare correction, which is a so-called WXYXZ correction. All of these all of these waves, it's not just letters. They all have clear rules to adhere to, right? So all these subwave counts need to be correct as well and checked. So all of these subwaves are corrective wave patterns. They have to be. And there are different rules, just to explain that, right? Okay, but that was complete, in my opinion, in 2020. And from here then we moved up. You know, you see these labels, wave 1, wave 2. So based on that, my assumption is we are now in the third wave. Yeah, the third wave can take us somewhere around $250. But the third wave is not just gonna, it's not just one wave or one straight line to get there. No, there are subwaves as well. And the third wave consists of 5 subwaves. And in my opinion, we have already seen the first wave, which was in March 22, or roughly early 22. We are now coming down in the wave 2, then there will be a wave 3, there will be a wave 4, and there will be a wave 5, but it can take quite a long time. And then we get to that $250 target for the third wave. Now that can take years to play out, okay? Therefore, what's important to us is the most imminent wave count. Now, my view is that from March 2020 or April 2020, we moved up in a 5-wave impulse to the upside to form that wave 1 of 3. I then thought until we've seen now this strong bullish engulfing candle that you can see here on the weekly. So in the last video I told you that there is a good likelihood we go down straight away into my target area here. But with the latest bullish engulfing candle, that got less likely. It can still happen, but it got less likely. I think primarily now that we're going to see a larger reaction to the upside, a retracement before we come down. So it doesn't at all change the the higher level assumption really. So instead of having an ABC here, which would have been complete after these 5 waves, I now expect that this is a WXY pattern, which allows me here in the Y wave to have a wave A, a wave B, and a wave C. And I think we have seen the first 5 waves, yeah, but we haven't come down far enough to end this sort of bear market for oil. I don't think so. I do expect now a larger rally to the upside, yes, but not a breakout. And let's talk about why. The main reason is that on the higher time frame, we have not reached the target. We have not reached the 50% Fibonacci retracement level. We have not reached the $76 level or $77 level. I need to see that ideally, yeah, and that's what we do. We look for ideal wave patterns. Now, on the flip side, should we already get in this rally above the $126 level, then I would have to consider a direct breakout, and my assumption would be wrong. But until then, because of the higher level pattern, and that in my opinion the overall correction has not been deep enough, my view is that we still come down lower. I mean, if I go to the daily chart, we can still see a reduction in positive momentum, right? And we just about to create a bearish crossover, or we have created a bearish crossover on the daily. That is nothing bullish, right? And also the Elliott wave count, it doesn't, the minimum retracement for me, for such a large correction on a higher time frame for oil is the 50% fib level, and we haven't reached that. So my assumption is that from the high, which was made here in June at $125.20, we've come down in 5 waves, 1, 2, 3, 4, and 5. This finished off a wave A. I now think we are in a wave B to the upside. This was already on the chart as an alternative count. It is now going to be the primary one, but I might have to just adjust it slightly because we have moved slightly. So I just have to move it to the 50% fib level as a minimum retracement, which would be the $104 level, $104.70 for this wave B. And then I think we come down in a wave C, which would be another 5-wave move. And then we would get into this larger area, which is located between $42 and $76. Yeah. Now, where are we now in this B wave, in this wave B? Now, my view is, if I probably have to go to the, probably go to the 1 hour chart, it's probably best. And yeah, my view is that we have probably already seen here a wave 1, we've seen a wave 2, we've seen a wave 3, here probably a wave 4, and we're going to check that now. So just to show you, so there's 2 possibilities here. First one is that indeed this was a wave 1, this was a 2, this here can now be the 3, here a 4, and then a 5 to the upside. So not directly into that here, because the B wave in itself is an ABC pattern. So I don't think this move up is already finished. So we would have an A, a B, and a C. Okay. The point is, I don't know at this stage if that overall 5-wave move is already done or not. I don't think it is. I think we are going to push here a bit higher, but it could very well be that the wave 5 was already in. It's not ideal in terms of the structure here. So, I mean, it would be a very short wave 4 and a very short wave 5. Nothing that I would find ideal. But let's take a look how far did actually now this move retrace. So we came to the 50% fib level here. Okay, so at the moment, this is the maximum a wave 4 should do. So if you say, all right, we've got this situation, then the price now needs to turn to the upside. It needs to. If it falls a bit further, then I have to assume that this is already the wave B. It doesn't change again, it doesn't change the overall pattern. The view is now that we get to this level, somewhere between $104.60 and $120 or $121. How we get there, there's a couple of possibilities. It could be the wave A is already done. We are now in the B. That can retrace a bit further. That could retrace all the way down to $86, right? So if we fall any further than this, my view will be that this is a wave B already. So I'll probably update you in the next video, and that we are going to move up in a wave C next, and that would be another 5-wave move to the upside, right? So that's how I see it at the moment. At the moment, I would still give it the benefit of the doubt and say this is still a wave 4. The wave 5 is still coming. Then we'll get a B down and a C up, but we'll see. I can't really define that. The only point I can say to you is that if we drop any further than where we are now, most likely the 5 waves of the wave A were already in. Or alternatively, I mean, that's a possibility as well, is that this is going to be a flat pattern, A, B, C, which is possible as well. So if you have so there's 2 types of there's two types of, or two main types of ABC corrections. There is the so-called zigzag, where you get 5 waves here in the wave A, then 3 waves in a wave B, and 5 waves in the wave C. That's a zigzag pattern. And then there's a flat pattern. In a flat pattern, you only get 3 waves up in a wave A, 3 waves down in a wave B, and 5 up in a C. So there's always 5 in a C, but the wave A differs. So that's why I mean it could very well be that the wave A is already in, right? If this is the case, in a flat pattern, the wave B comes down quite strongly. So if we come down maybe nearly to the beginning of the wave A, that would be a really strong indication this is a flat. So that's what I mean. If we drop any further than this, it's probably a wave B already. 2 possibilities here on the chart, very clearly, yeah? Okay, and then getting into this area and then coming down. I think this is sort of my key assumption at the moment. Again, should we break above the wave X high, then I would have to say, okay, the assumption was possibly wrong. We are already breaking out, yeah, because it is highly unlikely that this wave B is getting above the wave X at $125, $126. But yeah, that's my update about oil. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And also make sure that you follow us on Instagram and Twitter. And if you really like the content, also check out my main channel, More Crypto Online. And the link for that is in the video description. Thanks a lot for watching. Bye-bye.